stakeholders, including our customers, shareholders, employees, and all concerned for their support and helping us in creating sustainable value not only for the bank but also for the economy as a whole. I will first start with a brief description of the present global and domestic economic scenario and will then discuss the bank's performance. In the last few months, global economic activity appears to be strengthening across advanced economies and emerging market economies. Global trade is gathering momentum, inflation is approaching targets, but the pace of disinflation has somewhat slowed down. Central banks are closely monitoring the growth trajectories, employment and labor market outlook, and price trends, with the US Fed expected to have a 25 basis point cut in September 24. As far as domestic economy is concerned, second quarter of financial year 25 has begun with gaining growth momentum. The benign monsoon pattern and its accelerated spatial distribution of late should smoothen the inflationary expectations in the medium term. Latest numbers show that scheduled commercial bank credit growth by 14%, while deposit grew by 11.3% for the third consecutive year till now. The credit growth has been higher than the deposit growth. New investment announcements, which were around 10 trillion during 2021, has improved to more than 37 trillion in the last 2 years, 23 and 24. Major industries where new announcements have been made include non-renewable energy, electronic, renewable, basic metal, inorganic chemical, and the real estate, particularly the residential buildings. The union budget announcements are positive for the market. The thrust to consumption revival, PM Suryaghar Muft Bijli Yojana, PMAY Urban, MSME and startup agriculture will go a long way to boost the Indian economy and also enhance the infrastructure investment in the economy. Coming to the bank's performance, we have once again delivered excellent numbers. I am happy to share that our net profit for the quarter one of financial year 25 is at 17,035 crores and shows an increase of almost 0.90% over quarter one of financial year 24. Operating profit at 26,449 has witnessed an increase of almost 5% on a YOY basis. Bank continues to report ROA of greater than 1, which is at 1.10 for the quarter one of financial year 25. The ROE of the bank for quarter one of financial year 25 is at almost 21%. The cost to income ratio of the bank is now at 49.42% for the quarter one of financial year 25 and shows an improvement of 95 basis points over quarter one of financial year 24. Net interest income for quarter one financial year 25 has increased by 5.71% YOY on the back of improvement in yields and continuing credit offtake. Operating expenses have increased marginally by 0.65% YOY. We believe sustaining our profitability at these levels highlights the resilience of the underlying value drivers of the bank. Our deposits have grown by 8.18% YOY and term deposits have grown by 12.20% YOY. CASA deposits have grown by 2.59% YOY and we have taken several steps to strengthen our liability franchise. I am pleased to advise that the credit growth continues to be robust across all segments. Our domestic advances have grown by 15.55% and the retail, agri, MSME advances have crossed 21 trillion during quarter one of financial year 25. Out of the above, retail personal advances constitutes 13.7 trillion, agri advances at 3.09 trillion and SME advances at 4.43 trillion, growing at 13.60, 17.06 and 19.87% YOY respectively. The corporate segment is also showing healthy growth at 15.92% YOY. Our foreign offices have continued to perform well and advances have grown at 14.41% and deposits in the foreign offices have grown at 10.48%. Our liquidity position is comfortable with the liquidity coverage ratio being at about 129% as on 30th June 24, which is well above the regulatory benchmark. The domestic CD ratio is at 69.28%, indicating significant cushion to grow our credit portfolio. I'm happy to share the progress we are making in the digital banking. Almost 8 crore customers have been registered in YONO, driving digital agenda of the bank. 63% of the regular savings bank accounts were opened through YONO in Q1 of financial year 25. YONO business has gained significant traction with more than 29 lakh users having registered till now. We are now leveraging analytics with significant business of almost about 25,000 crore during the Q1 of financial year 25. As regards asset quality, our gross NPA ratio has improved by 55 basis points YOY and stands at 2.21% as on June of 24 and continue to be at its lowest level in more than 10 years. Our net NPA ratio has also improved by 14 basis points YOY and stands at 0.57%. Slippage ratio for Q1 of financial year 25 has improved by 10 basis points and stands at 0.84%. We have a well-provided stress book and PCR including OCA standing at 91.76% and PCR excluding OCA is at 74.41%. Here I would also like to mention that during the quarter post June 30th till now almost about 1,600 crore plus have been recovered out of the slippages which you had seen as on 30th June. Capital adequacy, the bank has remained very well capitalized and we have sufficient headroom to take care of the normal business growth requirements. Our capital adequacy ratio stands at about 13.86% with CET ratio at 10.25%. Without considering the plowback of the profit, both the ratios are well above the regulatory requirement. And the fact remains that even today with this kind of a capital, we can easily support the balance sheet growth of almost about 7 trillion without any hassle. Our subsidiaries are also consistently performing well and continue to create significant value for all the stakeholders and most importantly for the customers. We will continue to nurture these subsidiaries and see them creating value for their own shareholders as well as the shareholders and the customers of SBI. To conclude, I would like to thank you all once again for your support to the bank. The bank, while pursuing its own progress, contributes to the progress and growth of the economy. We remain committed to rewarding your trust in us with superior sustainable returns over the long term. My team and I are now open to taking your questions. Thank you very much.
Thank you so much, sir. Now we move to the media question and answers. To ensure seamless flow of the session, we'll move from my left to right so that everyone given a chance to ask a question. We request you to please follow the format and restrict yourself to 2 questions focused on the result. If time permit, we may repeat the circuit for a detailed question. We may begin from Ankur.
Hi, Ankur Mishra from ET Now. Your loan loss provisions have been elevated 70% YOY and 37% QOQ. What has been reason on that front? And apart from that, I also see credit cost as well as slippage ratio. There is an increase QOQ.
Well, I think as far as the first quarter is concerned, it is always a unique quarter and it should be seen on a YOY basis and not on the QOQ basis. This is one submission which I would like to make. And your other issue which you have highlighted in terms of the loan loss provision which is on the higher side, well, we don't have any challenge. First of all, let me just clarify that. When it comes to our credit cost, it is at 0.48, but still it is much less than what we have already given the guidance over the years. I think when it comes to slippages, even slippages ratios have come down by almost about 10 basis points on a YOY basis. So I think I would also like to mention that out of 7,900 crore worth of slippages, we have already recovered almost about 1,600 crore after June 30th. And if at all you will look at the slippage ratio over the period June 22 it was 1.38, June 23 it was 0.94 and now it is at 0.84. So that very clearly reflects that there is no challenge as far as our asset quality is concerned. Well, and as far as loan loss provisions are concerned, just one sec.
Fresh slippage and aging provision.
Actually, part of it is also attributed to the aging provision for the standard assets also. And since our balance sheet is growing, so that's why we are required to make provisions for that, for the standard assets also, and that is the reason why we have seen this kind of a growth.
Next question is from Ekta from Z Business.
गुड इवनिंग सर। सर मैं आपसे ये पूछना चाहती हूँ कि अभी आपने बोला कि डिपॉजिट ग्रोथ जो है, क्रेडिट ग्रोथ जिस तरह से बढ़ी है, डिपॉजिट ग्रोथ उस तरह से नहीं बढ़ी है, तो ये एक चैलेंज बैंकिंग सेक्टर में हम देख भी रहे हैं। तो अभी जो आरबीआई का एलसीआर पे ड्राफ्ट सर्कुलर आया है, उसका भी आप कितना इम्पैक्ट देखते हैं, क्या ये चैलेंज बढ़ने वाला है?
देखिए, अभी ड्राफ्ट सर्कुलर आया नहीं है, इट्स ए कंसल्टेशन पेपर ओनली, और कंसल्टेशन पेपर के रहते इट हैज़ गिवन अस एन अपॉर्चुनिटी कि हम जो है आरबीआई को अपने व्यूज़ इस बारे में बता पाएँ। तो आई थिंक इस बारे में ज़्यादा बात तो अभी नहीं करेंगे, लेकिन जहाँ तक आपका दूसरा पहला सवाल जो था कि जो डिपॉजिट ग्रोथ, देखिए डिपॉजिट ग्रोथ इज़ वन एस्पेक्ट, बट एट व्हाट रेट आर वी ग्रोइंग द डिपॉजिट प्राइस in terms of cost of deposit. So we have to be very mindful, and since we have ensured that when nobody was picking up deposit, we picked up the deposit, we put it into the investment book, and today we have got a comfort available, and that is something which has given us a leeway in terms of almost about 3.70 trillion. We have got the excess SLR which is available to us, and that is helping us in terms of ensuring that we feed our loan book growth without incurring any extra cost, and that is actually getting reflected in our NIMs also. Though if at all we will look at our term deposits, our cost of deposit has gone up by almost about 50 basis point, 45 basis point to be precise, but when it comes to our NIM, it has only come down by about 11 basis point. So this is very clearly reflected that we are making an optimal choice in terms of at what price we should raise the deposit, but at the same time, while I'm saying so, we are very mindful in terms of the deposit franchise. We must not compromise the depositors' interest, and that is the reason why in certain buckets we have already increased the interest rate for the term deposit. And also I must also mention that invariably we have seen that when there are alternate options available in the as far as allocation of savings are concerned, people have a choice. They want to go to markets, they have gone to market, but primarily the bank deposit remains the channelizing source for all that. So I think, and we have also looked at the past data. I must also mention that way back in 2010-11, we had a similar situation where the loan book was growing much faster than the deposit book. And that was a point of time. We have seen that in the past also we have witnessed this situation. This is not something which is going to be there forever. This is a temporary phenomena. Hopefully we should be in a position to navigate with our excess SLR. But even if otherwise, we have already raised about 20,000 crore worth of our infrastructure bond, and which we could raise at a very, 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 very competitive price. Now we have also opened our CD book, which is about 50,000 crores CD program, which we have already raised, and there also we are in a position to raise that deposit at very, very competitive rates. So I would only like to highlight, raising deposit in absolute term, at what cost and price you are raising the deposit, one should not lose sight of that. Thank you.
Next question is from Shipra from the Informers.
Good afternoon, sir. This is Shipra from Informers Media. I have two questions. My first is, I just want to understand how much more are you planning to increase your MSME book now that you've launched your MSME Sahaj program as well. That's my first question. And the second one is relating to the deposit rates. As you said that you've already increased your deposit rates in certain buckets. So how much will you be keen on increasing those rates further? And
No, we will be actually evaluating the situation from time to time. When we meet in our ALCO, we take the comprehensive view of the situation obtaining at the material point of time, and accordingly we take the call. Your other question relating to how much we will grow in MSME, we perceive that there is a decent opportunity which is available in MSME. If at all we can find the right risk which is according to our risk appetite, we will be happy growing into MSME's book. We have not put any kind of a upper ceiling. This is the second quarter when we are growing in the MSME at 20%. So I think, so long as the risk appetite, risk which is available is in sync with our appetite, we have got no challenge in supporting MSMEs.
And digital SME program.
And also digital MSME, which we have introduced. We have come out with a BRE model, which is from 5 lakh to 5 crore, and it has actually helped us in terms of assessing the MSME while we are really carrying out the appraisal itself in the digital form. So that is something which has helped us in terms of improving our delivery for the MSME also.
Next question is from Ram Kumar of Hindu Business Line.
corporate book seems to be growing pretty well actually compared to the retail loan book.
Yeah.
Is there any kind of change in tack actually as far as loan growth is concerned? Are you trying to slow down your retail book, or some unsecured loans you are trying to?
No, see, the point is that post increase in RWS by RBI on the unsecured book, we have to, when we go for the portfolio choice, we have to keep in mind what is the RWA, and we have seen decent traction coming in from the mid corporates. So that is the reason why we are in a position to grow our loan book well, and actually that is growing almost at about 20% as far as the mid corporates are concerned. So that is the reason why when it comes to choice of portfolio, we have calibrated our retail unsecured loan book, which is our personal loans and our pension loans. But yes, of course, there is a huge opportunity, but we want to ensure that we should be in a position to earn a decent earning as far as the portfolio is concerned. So we keep on calibrating this kind of approach.
And you also mentioned that your current level of capital adequacy is good enough for supporting normal growth. So
yes.
You can tell us what is a normal growth?
We can easily grow to the extent of about 6.5 to 7 trillion.
6.5 to
7 trillion.
Okay. Thank you, sir.
Next question is from Hamsini from Money Control.
Hi sir, if I look at your CD ratio at 69.8%, to 8%, sorry, it's much lower compared to the average that PSU banks also have. So is it that your liability book is repricing faster, which is what is weighing on your NIMs at this point in time? And just as an add-on to that, do you foresee a point where in FY25 you can start seeing NIMs go back to where we were in 23 or something, or a little more fall in pace of NIM reduction?
Well, I think as far as its effort is there to protect the NIMs as much as possible, and that is the reason why, despite the increase in the average cost of deposit, you have seen the NIMs coming down only by 11 basis point. So that will be our strategy going forward also. So when it comes to repricing of the book is concerned, I think the fixed deposit, which is the term deposit, which are in 1 to 2 year bracket, that is something which is the maximum component of our term deposit, and that we had increased about 6 months back.
Twice we have increased, sir.
Twice we have increased.
We have come up with a new scheme also.
So we have already come up with the new scheme, but I think to my mind, it should not have very significant impact. We should be, because every time we increase our term deposit, it gives us elbow room for increasing our MCLR also.
Yes.
So that is something we are in a position to attract, to balance both the things. So I think hopefully the kind of strategy which we have followed all this while, which has helped us in protecting the NIMs, we should be in a position to protect our NIM. And if at all it has to come down, we should try and see that it should come down the minimum possible.
So can I assume the worst case NIM will be somewhere in the ballpark of 3.05 to 3.1?
No, why should
No, I don't think so. It should come down. My expectation is that we should be in a position to operate between 3.2 to 3.4, because domestic NIMs are even today at about 3.35. So when it comes to overseas, if at all, bank as a whole we are at 3.22, but domestic NIMs are actually at 3.35. So we should be in a position to operate around that.
Thank you, sir. The second question is with respect to your ATM deployment. That's fallen from about 65,000 units to 62,000. Is there any particular reason why you've scaled back on ATM? And
no, we were in the process of upgrading the ATMs, and almost about 7,000 odd ATMs are to be upgraded, and we have already brought in about 1,500. So the remaining are also on the way, and we should be in a position to ramp up almost to the same level.
where do we stand on YONO 2.0, sir?
YONO 2.0, we are almost in the process of upgrading and should be launching our beta launch also. But YONO 2.0, you may not get to see it in one go. This is more incremental in nature. And if at all you would even now also experience YONO, there are many capabilities which have already introduced. And that is one of the reasons why the performance of YONO Touchwood is excellent.
Thank you.
Next question is from Siddhi from Reuters.
Hi sir, my first question is on your corporate loan book pipeline. If you could throw some, give us some numbers on the sanction and the disburse.
Almost about our pipeline for the corporate loan book is somewhere in the range of 3.76 to about 4 trillion. and it is actually, I would say that more in favor of the private sector than the public sector. So that is something which is something. 4.62 trillion is the total number.
4.62. Right?
Yeah, 4.62.
Pending sanction is this? Pending
And
disbursement.
out of that,
And the pending sanctions are about 2.26 and pending disbursement is 2.36.
okay. So if you could also, so your corporate loan book, as Ramsa pointed out, is higher than the retail book. Can we safely assume that you'll be banking on the corporate side to, achieve your guidance for loan growth? I guess it's 12.
No, I don't think so. I don't think so. For us, even our rebu is also growing at a very handsome pace. Similarly, I would only like to mention that we are very mindful in terms of our yield on advances in each of the portfolio. Wherever we are in a position to make decent amount of money, we are having a focus, because when it comes to trade-off, we look at what is our yield on advances in different buckets, in different portfolios. That is something which is a guiding factor.
Okay. So my second question is on your stake in Yes Bank. Any update on that front, if you could help us?
As and when there is an opportunity, we will certainly share with you. Thank you very much.
Next question is from Falak Naz of Deccan Chronicle.
So Telangana government has announced a farm loan waiver, and this Punjab and Jharkhand also are looking at considering farm loan waiver. So what impact it will have on your asset quality?
See, the point is that as and when state governments announce the farm loan waiver, as far as banks are concerned, they are being compensated. It is actually a stress on their balance sheet only,
So,
on the state finances.
so there won't be any impact on your asset quality.
Yeah, we do see some impact in terms of the culture, but I would only say that the borrowers who are associated with us, they do see the merit that if at all they repay their dues in time, the relationship only gets strengthened and their ability to raise more and more money gets increased. So eventually, for their prosperity, I think it is in their interest to honor their repayment obligations.
And you just mentioned that you are more, upbeat on corporate, growing your corporate book. So are you seeing some kind of stress in personal loans?
No. See, the point is that personal loan little stress which is seen in this quarter is essentially attributed to the fact that some of the state governments are not in a position to pay their salaries in time. And that is one of the reasons why what I mentioned, that about 1,600 crore has already been recovered. The salaries were credited little later and we could appropriate that. So we don't see much of a challenge in that. Since these are the personal loans which are given to only those who are into, who are maintaining their salary accounts. As and when the salary comes, we're in a position to recover. And in some situations, in some stray situations, it has happened that the corporate salary account has gone to some other banks. So that is one of the reasons. These are only stray instances. It doesn't really help much, impact much as far as our loan book is concerned. In fact, corporate book is growing when we are unwinding our investment book. It is not growing because if at all we are reducing our personal loan. So retail is not really getting impacted. Retail growth continues to be about 11-12%, which was there even in the last quarter. And I think our compounded annual growth rate for the retail is actually at about 16%.
Economy also growing.
So economy is growing. So that is something which is happening. So it is actually unwinding our investment. Because our yield on investment is somewhere around 7% and our yield on advances is somewhere around 8.86%. So every time we are increasing our loan book, we are actually improving our earnings to the extent of 2.86.
Why is your profit flat?
Profit is 0.89%, 0.90%. I don't think it is really flat. Because we normally get to see the busy season coming towards the second half, not in the first half. And first quarter per se has got lot many distractions. And even I would also like to mention, even in the first quarter, even agriculture also will get to see the events happening post July only. So that's a reality.
This 25,000 crore that you raising, you already wasted a lot of capital in the past month. So this is
no 25,000 is our tier 2 and 81.
20,000 we have raised.
Sir, moving to the other side, Harsh from NDTV Profit.
Yeah.
Good afternoon, sirs, ma'am. Sir, first off, I want to take a cue from what was just asked with regard to capital raise. So, can we expect an equity raise sometime second half this year, first half next year? Is that the thought process?
We will evaluate the situation, because I must also mention that in last 3 years we have plowed back 1.14 trillion, and that is one of the reasons why even today with the current kind of a capital, we are in a position to support almost about 6 to 7 trillion worth of additional loan book.
I understand. And so with regard to what does that do, if at all that were to happen, what does that do to your ROA? Because you've held above 1% very healthily. Would that continue to be at least the attempt that you will continue to be above the 1.1, 1.2% kind of threshold for full year post an equity raise if that were to happen?
That will be our endeavor and effort, and we will certainly try and do that. We have already demonstrated in the past also, whatever guidance we have given, we should live up to those guidance numbers.
Understood. So if I were to touch upon rural as well as unsecured, any stress seen by yourself on any of those books at all, or do you believe there is some stress coming through? Is that the expectation? How should one look at it?
See, as far as our rural book is concerned, we have brought down our gross NPA from 13 to about in the range of 9.
9.5.
From about 14 to 9. So I think we are in a position to fix the challenge relating to the NPAs in the rural book, and our effort would be to bring it down towards 8. The other area which you have mentioned about the unsecured book I have mentioned to you that it was a one-off which was essentially attributed to the delayed receipt of the salary by a few circles and delayed payment of salary by a few states. That is one of the reasons. But as far as it has remained much below 1, that is something which gives us a comfort. And going forward, I don't really visualize a situation that where the stress is being built up, because if at all you will look at our SMA 1 and SMA 2 number as compared to what it was in the month of June of 23, we are much lower. So that itself is a reflection that there is hardly any built up of the stress as far as we are concerned.
I understand. So my last question is on corporate. Corporate capex hasn't really picked up in a substantial manner. I understand nearly 16% growth for you YOY, but when I'm looking at it sequentially, just about 3 bips. Do you believe that is a concern from a system perspective, or do you believe that is just...
No, I think there are various things which have to be kept in mind. The pipeline which I have just indicated, one has to understand how the corporate borrowing actually happens. It happens over a period of time. It doesn't happen overnight. That is one. Secondly, when it comes to, we are seeing the trends in terms of availment of the credit, which are healthy. We are seeing trends in terms of flow of credit proposal, which itself is a reflection of the confidence of the corporates. As I mentioned that as compared to 10 trillion, the commitment has gone as high as to 37 trillion. So that itself is a reflection that there is a confidence. But yes, of course, all this will happen over a period of time. Similarly, when it comes to the government initiative in terms of PLI, government initiative in terms of infrastructure, they will all show up in the corporate book. And that is one of the reasons why when it comes to our mid-corporate, we are seeing the growth traction very clearly. So this is something which we have seen. And also when it comes to the bond market also, that also is actually booming well. So it is not necessarily that corporates will only come to banks for borrowing. They will actually go to bond market as well. So I think one has to look at all these sub-components of the market to really understand the corporate behavior. So that's how I look at it. And now with the help of the new investment guidelines, we will not have any constraint in terms of investing into the bonds as well. It can be either loan or it can be bond. So that is also something which is now available to us. So I think I actually see that the corporate holds the potential and also the promise.
Thank you so much, sir.
Thank you.
Next question is from Joel of Economic Times. Good afternoon, sir. You mentioned that a large part of your provisions are from aging standard provisions. Can you just give us some sense of how much is come from where? How much of the provisions are from aging standards?
Maybe Saloni, if you can. I would not remember that number.
No.
Please.
And also an outlook on the provisions, because this is a seasonality first quarter.
No, I think first quarter is a seasonality. I expect that we will be eventually moving the way we have moved in the past as far as our credit costs are concerned. We are very mindful in terms of quality of underwriting, and we don't see any challenge in the underwriting. So, and also control follow-up is equally strong. So I don't see any reason why there should be any challenge in terms of the quality of assets going forward.
Coming to your point of provisions, the total loan loss provision is 4,580. And the first quarter last year it was 2,659. The increase is mainly due to aging provisions, which is 2,487.92, and it is 2,487.92. That is the aging provision, and this includes around 795 of CCG accounts, and other are all retail.
So aging is something which is a major component.
And agriculture, we have done a provision of 105.66. 105.66.
So in fact, agriculture we are seeing much better traction, because coming down in the GNPA from 14 to 9 and hoping to see it in the range of 8, that is something based on what we are doing on the ground. That is the reason why we are talking.
And the slippage provision for this quarter was 1939.60. First quarter normally it is high, so going forward it is going to come down. So we have already recovered. Kenny says that 1608 crores has been recovered. So going forward definitely it will come down.
My second question is on the other income. We've seen a drop in other income as well. Is it to do with the...
No, this is partly attributed to the treatment of the MTM which was there in the past. Now it is not there. So that is one of the major reasons. Yeah, treasury. Valuation norms essentially attributed to valuation.
You mentioned that mid-corporates are seeing a good traction. Do you see going forward that is where the growth will come from, especially from the large chunky?
No, I would actually believe that it should come from there. Large corporates would have multiple other options available. They can raise from the market, they can raise through equity, they can raise debt capital market, they have all options available. But mid-corporate will have more dependence on the corporate, bank credit. So that is what we expect.
Thank you so much, and all the very best. I think this is your last.
Thank you. Thank you very much.
Next question is from Preeti of Bloomberg.
Hi, Mr. Khara. I know this is your last conference with us, so just wanted to check, as you look back on your time here, what are a couple of things that you're really, really proud of having initiated, and maybe a couple of things that you wish you had, a business line or something that you had focused on or initiated?
Well, as far as one point which comes to my mind is we were just looking at some numbers while we were in the board. In last 4 years?
Yes, last 4 years.
Last 4 years we have earned a profit of 1.54 trillion.
1.63 trillion.
1.63 trillion, which is all put together is more than the
1,45,000 trillion in the last 64 years, and in 4 years we have.
So last 64 years, whatever profit we earned, as compared to that, in 4 years' time we have earned more than that. That is one. Secondly, when I assumed office, our annual profit was 14,000 crore, and today I am happy to share that the quarterly profit is 17,037 crores. And our sharp focus in terms of quality of advances, our sharp focus in terms of fixing the operating issues on ground, and also our sharp focus in terms of shoring up our other income. These are some of the factors which has helped us in achieving these numbers. And on the top of it, the productivity level has improved significantly. I think there's a slide on productivity where our per employee wages has gone up from, just one sec, I'll just give you that number also.
From 23.73, sir, in 21, it has gone up to 37.06. This is business per employee in crores.
That is from about 24 crore to about 38 crore in 4 years business per employee. It has happened.
Coming to
The profit per employee also. The profit per employee has gone up from 5.79 to 29. From 5.79 lakh, 5.79 crore. 5.79 lakh to about 30 lakh rupees. 30 lakh rupees. So which means that the productivity lever has actually worked. So this is something which I would say is nothing but a commitment and dedication of each of the State Bank SBIN, which has helped us in reaching these numbers. And of course, you said what I would have liked to see. My ambition was to see the State Bank of India generating 1 trillion profit after tax. Last year, actually, we were at about 83,000, and the kind of trajectory which we are following this year, I believe that it is likely to be a reality.
Thank you, sir. All the best.
Thank you.
Next question is from Abhijit from Business Standard.
Good afternoon, sir. All the best for your future.
Thank you.
One is what we saw the change in the investment rules for the quarter one. Some of the treatment was to go to the reserves.
Yeah.
How much really has got added to the reserves, which otherwise would have been in the treasury?
I think it was about 43,000 crore, if I'm not mistaken. That was AFS. 4,300.
4,700 is added to the AFS reserve. It's in the notes also.
CT1.
Sorry?
That will be part of the.
That will be part of CT.
It will be part of CT.
Yes, it would have gone in treasury.
It is gone into AFS reserve.
AFS reserves.
It would have gone in the last year.
Otherwise.
Yeah, because when it would have gone into the MT.
Yeah, that's it.
And second is on the deposit side, though the cost is what you are doing, but you also spoke about the Fed reducing the rate. So I'm presuming the central bank will be able to. Would that change the pressures, and have you seen the peak of the interest rate?
No, actually, my assessment is that if at all deposit rates will come down, maybe we can get to see maybe two such instances and maybe 50 basis point or so. That will be the repo rate coming down. So that is something which we can hope. I really don't know whether it will happen or not, because RBI is very clearly focused in terms of inflation, and unless and until we reach that 4% inflation, I'm really unsure whether we'll get to see that. But my sense is that central banks are of late decoupling themselves. Depending upon the local situations, they are really calibrating the interest rates. So that is something which is going to be a reality. But we have done some assessment in terms of how much it will really impact. Our sense is that in terms of the basis point, it is not really evolving into a very big number. I think about 4 to 5 basis points, some such number is coming. But it is not as much of a worry.
That is as far as policy rates. The cost on
No, cost of funds, actually, see, the point is today market is very different. On the one hand, we are seeing that the G-Sec yields are coming down. On the other hand, we have got a situation where deposit rates are going up. So I would say that there are various components of the market, and they're all behaving very differently. So eventually what will be our deposit cost will depend upon what is our source of raising deposit.
Will it entice you to go for another round of infrastructure funds?
I don't deny that, because actually speaking, we have got a infrastructure book which is as high as about 3 trillion, and as of now our infrastructure bond issuance is about 60,000 crore. So we have got ample scope. But yes, of course, we will be very mindful in terms of at what rate we can raise infrastructure bond. So that is something. That's why we have now looked at various multiple options. Infrastructure bond is one. Similarly, CD is the other one. So these are the multiple options which we are now evaluating in terms of how should we shore up this level, deposit levels.
But still, you will consume 50,000 in CD like nothing.
But at the same time, our 22,500 branches will continue to work. You have seen their productivity numbers. So, and also I must also mention that now of late we have started focusing on the premier banking and the relationship banking, and that is something we have actually, for the current account itself, we have put in about 500 odd relationship managers on the ground who are engaging with all the the private sector opportunities when it comes to the current account business is concerned, and likewise, very, very sharp focus in terms of how is the balances being built in the savings bank. And I think there also one important slide is there. I would like to draw your attention to that, and that is something which gives a clear picture that how our efforts are showing up in terms of our balances are actually going up in the savings bank. So that is, and also incidentally, our average balance in savings bank today is almost 3 times more than that of the next competitor. So that is something which I thought I must highlight. And we are opening almost about 60,000 savings bank account on a daily basis.
63% through YONO.
And 63% of these accounts are getting opened through YONO. The point which I wanted to highlight that our average balance in the savings bank account has gone to about 17 trillion in June 24 as compared to 12 trillion in March 20.